A housing market update for the Greater Lafayette area. And I'm going in depth here. So buckle up and get ready. Tune in and pay attention, because I got a lot of data that I'm going to talk about and tie it all together into what we're seeing right now, and then what history kinds of tells us that what we should be seeing in the next month or two or three. Let's look at inventory to start with. Last month's inventory finished up at 302 homes for sale in the month of December. And we can see that the statistician's expecting a range of 306 to 338. That's what this lighter blue band is. So we didn't quite hit expectations. We're down about 21% month over month, but 47% up year over year. So more homes for sale in December of 2025 than there were in December of 2024. And if you stick with me and you get all the way to the end of this report, we're going to look at the longer term averages. What we're seeing here is seasonality. It's tied to the temperature. Do you want to go move when it's cold outside and there's snow on the ground? No, of course you don't. Sometimes you have no choice. More homes are for sale and are sold in the summer than there are in the winter. So this downward trend, that not even a trend, but this downward blip here in December is not a bug. It's a feature. That is not in response to any sort of national news. This is just the real estate market here in the Greater Lafayette area. And to further illustrate that point, we're going to look at new listings. This is the number of new homes that were for sale, that were listed for sale throughout the entire month. And in December, it was a pretty 68. These are new homes that went for sale for the first time. Now check this out. I want to draw attention back here to May, where it was 293. That is as close as we have gotten to a balanced market in years. And we still didn't quite get there. Historically, it's been about 300 homes for sale in the Greater Lafayette area to be in a balanced market. That data, that number is probably a decade to a decade and a half old. I think with population and housing growth over the last decade to 2 decades, that number is more like 400, maybe even 450 homes for sale at any given time. You know, why that matters is because it dictates whether we're in a seller's or a buyer's market. We have very much been in a seller's market for several years now. Getting closer to the 300 mark pushes us closer to the territory of maybe one day being in a neutral market and then eventually pushing into a buyer's market, but we barely got there. And in December, again, seasonality, we're down to 68. So again, feature, not bug. The housing market did not collapse in Tippecanoe County over the last month. That's exactly what it was supposed to be. Closed sales. These are the sales that actually transacted. You got to the table and said, "Thank you very much. I bought your house." In December, it was 166. And we exceeded expectations on this one. The statisticians thought it would be 119 to 131. That's this lighter purple band. And you can see we overperformed expectations. Up 46% month over month. Up, more importantly, I think, year over year, 23%. December of 25, 166. It was 135, way down here last year towards not the bottom end, tick below. Now, again, look at January and February of last year. Those numbers went down, but then they started coming up. That's exactly what's going to happen now. We're seeing this trend line, this seasonality of trend line, come down in the winter and then go up in the summer. And then as we look at the annualized data over 10 years, we're going to see that those humps that generally go up, and keeping the camera view, up and down, but generally growing and growing as we go. So that is closed sales. New pending contracts for the last month in the Greater Lafayette area in Tippecanoe County, we had 92. This is, hey, I saw your house. I walked through your house with my realtor. I reached out to Geoff. I went to the LafayetteReal.com/YouTube and filled out the form and went and saw the house. And now we're going to write an offer on your house. And Mr. Seller says, yep, I accept your offer. And now we're going to start our period of what might be called due diligence, of walking towards the closing table, of getting inspections and all of that done. 92 in December. We slightly underperformed the statisticians. They expected 99 to 110. We were at 92. We were down 35% month over month. Now, we were actually down year over year by 2%. And what I keep talking about in these market updates is what we really care about is not the month over month. We're talking about seasonality here. So December is going to be slower than July. It's just the nature of the real estate market, especially here in Indiana and here in Lafayette, but anywhere really. We're going to have that seasonality. What I'm interested in is how did we perform versus last year and the year before? And on this one, we underperformed by 2%. So for all intents and purposes, it was flat. When you're talking about last year was 94 and this year it was 92. Two homes over 100, yeah, it's 2% down, but the sample is a pretty small sample size. Basically flat. I would like to have seen a little more improvement there. I am hopeful that over the next year we're going to see improvement. We have a lot of new neighborhoods breaking ground with some big developments and some regional and national developers coming to the Lafayette area. So I think that we're going to see the number of pending contracts increase year over year. I don't think it's going to be ridiculous levels. We're not going to go from 90 to 900. I am not saying that at all. But I'm hoping that we go in December of next year, instead of 90, 92, we're at 105, 110. Now, do national headlines and politics and news and worldwide economic policies and pressures affect our local market? 100%. Is there a lot of instability out there? Do we hear a lot of things tossed around out there? Absolutely. Are they going to affect our local market? Sure. But at the end of the day, when you have a strong local economy like we have, people are still going to want to move to the Greater Lafayette area to come work for SK Hynix, whether that's on the construction or to work in the chip fab. And people need homes. People are going to need homes as they come here for jobs. People need homes as they get married and have kids. It's just the nature of the beast that kind of no matter what's going on now. Could something nationally or internationally big enough happen to drag down the local market to an extreme? Oh, yeah. For sure. But we're not going to get too hung up on that right now. Median days on market is always a fun one to talk about that I like to talk about. And this is the number of days that it takes from the time that you, Mr. Home Seller, Mrs. Home Seller, put your house on the market till you have an accepted offer. Not till you get to the closing table, but you have an accepted offer. And again, you're going to work through that due diligence period of working through inspections and clearing contingencies and all of that. In December, it was 40 days from listing to pending. This number, more than almost any number that we're going to look at in this housing market update here in the Lafayette area, is one of the highest, is one of the most growth. Generally, in context of the rest of the numbers, like that growth is not in and of itself scary, but we're at 40 days, five and a half, call it, coming up on 6 weeks. Zoom back here to the low point in April, and it was 5. So if we put your house on the market on a Monday, you had an accepted offer by Friday. 5 to 40. Now, we are at what I would say is historically a little more normal number. But a lot of the other numbers surrounding it are not moving nearly as much. Houses are sitting on the market a little bit longer. People are putting their houses on the market because they've gotten new jobs, they need to move, they've had more kids than they can fit into their current house. Whatever the case might be, they need to sell. And this house sits on the market a little bit longer, which does show us a little more inventory on the market at any given time. If it continues to grow, though, at the rate that it's growing, that shows that people need to sell, but that there are not enough buyers coming in to backfill those sellers' needs to sell with the buyer's willingness to buy, and in some cases pay the price that the sellers are looking for, seeing some amount of being very careful on your listing price, although we're going to look at that data as well, so we won't put the cart before the horse on that one. But almost 30% up month over month, but 116% up year over year. Last year at this time it was 19 days, and now we're at 40. So basically it's 100% growth. That's something to pay attention to. Why are houses sitting on the market longer? Well, it's because buyers aren't buying them. Why are they not buying them? There are a lot of reasons for that, but that is the most concerning point of data that I have in all of these reports that I talk about. And I don't have all of the answers just yet. We're going to have to see some of the other numbers move to say whether the market is going to move. But at the moment, pay attention. Months of inventory, this is how many months it would take if no other houses came on the market when we run out of inventory. And this number ticked down. Despite it taking longer to sell houses, this number ticked down to 2 months. Now, the statisticians should probably give up on this one because their expected range was less than 1, and we're at 0.8 and 0.9. We're basically at 1 month. That's the expected range, and we're double that, and we have been for quite a while. 22% down month over month. 41% year over year, though. So we had a little more than 2.5 months worth of inventory in the last quarter of the year up until December, but then it ticked down to closer to 2. But again, less houses coming on the market. It's December, it's winter, so that's to be expected. 41% up year over year. That's good. We want more supply. We want more houses on the market. We want you to sell your house and buy your next house. We want people buying their first houses. Economically, that's what we want. And so having more inventory is good just in that we have had an anemic amount of inventory over the last few years. So moving on, price. Everybody loves to talk about this one. What are homes selling for? I'm not paying that. I got news for you. Yes, you are. If you want to buy a house. If you don't want to buy a house, then no, don't pay their asking price. To start with, this is the price. This is the median sale price in all of Tippecanoe County. And in December of 2025, over the last month, it was $287,000. Just a little above the statistician's expectation. Up 2% month over month and 3% year over year. So you could use this as a placeholder, as a stand-in for what are homes currently worth in the Greater Lafayette area. It's not quite that simple, but if you were, then it's like if you bought a house over the last month, the houses were worth on median average about $287,000. So here's the median sales price, $287,000. Median sales price. It's a fairly flat number over the last, back through about March. We hit this median sale price of like $323, and it's just hovered around here, slowly drifted down to $282. It's not moving drastically. We're up 3% year over year. People complain about houses are going up too fast in price. That's not worth it. I want to pay that. But the flip side of that, the thing pushing back against that is, don't you want your investment to increase in value? And this is that. So 3% up in price year over year. Then out of the monthly market report, we've got sale price as percent of list price in December, 95.3% over the last month, in the middle of expectations. So almost 5% off of the listing price. Oh, Geoff, people aren't getting what they're asking for their houses. They're overpricing them. 5% below is nothing. And it is easily explainable by asking for some concessions, sometimes closing concessions on repair costs. Sometimes it's a little bit of down payment assistance, closing costs, all sorts of things like that. 3% is a fairly good boilerplate number to like start the conversation, and even going to 6%, just think of multiples of 3. So that 95% means that, hey, maybe your buyer thought, I want to make an offer, but I at least want to feel like I'm negotiating. So let's ask for a percent or two off. So on a $300,000 home, we're talking about 3 or $6,000, let's say $6,000 at 2%, and then the seller accepts. So now you're 2% under that asking price, and then you work through the inspection process and you discover a couple $1,000s worth of repairs that you successfully negotiate the seller to do on your behalf, and there's another couple thousand, and so now you're at that 5% pretty quickly. So 95%, holding flat month over month. Down 2% year over year. Last year, it was 97.6%. It has moved in a narrow band. At the low end, it was 94.8%, and at the high end, it was 99.2%. So in a 4% range. If you price your house, you're getting what you ask for it. Now, the houses that are not selling, what's happening is they're coming off the market. And we're seeing a few more of those these days. They're not getting price reductions, drastic price reductions. They are getting pulled off the market and then maybe reassessed and maybe go back on the market and maybe don't. If you've stuck with us this long, keep sticking with me. I'm going to go through some more data. If you can't hang, cool. I appreciate you being here. Finish up by going to the LafayetteReal.com/YouTube and filling out that form. And let's work together on your housing needs here in the Greater Lafayette area, and hit the like and subscribe button. But next up, I got two more pieces to look at here. Let's see. This is more of a fun one. I'm not sure that it tells much of a story. Listing price, $292,000. That's just the median price of whole homes that came to sale over the latest week of the data. But you can see at the peak over the last year, it was basically 390, and down here at the low, it was 253. I'm not sure that data really tells a story outside of the fact that's just what homes came for sale at any given time. We looked at that, pending contracts, immediate sales. We have not looked at immediate sales yet. Let's check this one out. Immediate sales. This is percent of new pending sales that went under contract in 3 days or less. And over the last week of the data, 16%. The 3-week average, 9.5%. And we can see back here in April, May, this was May 12th, a little north of 50%. In the warmer months, we kind of lived in the 30 to 50% range. But as we got deeper into the year, it came down to the 20 to 30% range. And as we get down into the winter, it's dropping down into the 0 to 20% range. This is just the number of homes that takes 3 days or less to sell. That number is coming down. And I think overall, that's a fairly healthy thing from a buyer's perspective. Gives you a little more time to consider if you want to make an offer on a house. You don't have to tour a house and then go check it out. Price drops. What did I talk about? There are more houses that are getting price drops now than there have been. In the last week of the data, which this data covers through the end of December, it was 51.1%, the 3-week average 52%. And if we look at the chart, it's hovering right around this 50 to 55% mark since about September 22nd or so. Back at the beginning of the year, it was in the 40s, 45s. Again, winter. Houses sit on the market a little bit longer. Not as many buyers out there in the winter as there are in the summer. And then it drop. But what was interesting is it started building again in May and June. And as more inventory came on the market, we started seeing more and more price drops, 30%, 40%. We crossed 50% for the first time in September. And then it has lived up there. So 50% of homes listed have had a price drop. What does that tell you? It tells me that it is super important that you work with your realtor, that you work with me to get the pricing right on your house the first time. Otherwise, it's going to sit longer. You're going to take price drops, and the buyers are going to start wondering, what's wrong with it? And there may be nothing wrong with it. It might just be that you saw your neighbor make $10, $20, $30, $50, $100,000 off of their home, and you thought you would do the same thing. The reality is we don't set the price. The sellers don't set the price. The realtors don't set the price. The market sets the price. Supply and demand sets the price. And a good realtor is going to take time to evaluate what's out there on the market right now. How is it selling? What is it priced at? What do those comparables look like? What has the market looked like over the last few months? Where is the market going? Let's look at your neighborhood. Let's look at your town. Let's look at your county. Let's figure out where we sit on those trend lines, and let's get your house sold for the most amount of money in the quickest amount of time. And that means pricing it right. And half of people right now have priced it wrong. The market said, I'm not paying what you're asking. We're gonna pay less. And those sellers have had to go and make a price cut. And I think that is a really telling number. Talked about days on market. We talked about percent of list price. All right. So those are the short-term numbers. I'm going to wrap up I know I'm going long tonight, and thanks for hanging out, and thanks for hitting the like and subscribe button. It means so much that you join us here every Monday on Lafayette Live and on the Lafayette Reel. Hit that like and subscribe button. It matters. It helps a whole lot. Long-term trends. I've been talking a lot about what December had looked like, to talk about where we're at in January, but I need to talk about these longer-term trends in order to put us in a position that we can think about where we're going in February and March and April, and indeed through the rest of 2026. So we're going to look at 5 years of data now, just to show those trend lines and show you what that looks like. This is inventory over the last 5 years, and we can currently see over the last month we were at 302. We're downward, but this is what I'm talking about. In December, it goes down, and then it starts building through the summer, and then we hit December of 21, and it goes down, and it builds through the summer. December, January, February, always the low point. But we have this down and then back up, and then down and then back up, and now we're down. Now we're back up, and we've grown more over the last year than we have over the last 5. But if this report encompassed 10, 15, 20 years, we would see that these trend lines, this is what the trend line is, and it just slowly grows. Now, the up went pretty up. We had almost 400 homes for sale at the peak, 395. So the down, we're at 302. It's going to go down even more here in January as we're working through that inventory right now. There's going to be less inventory in January and February, and that drop is going to look a lot more precipitous, but that's because the high was higher than it has been, and we expect those deltas to exist. New listings over a 5-year period. In December, we had 68. At the high point of the year, we were at 300. But check it out. We haven't been anywhere close to 300 since May of 2022. It took us 3 years to get back to this 300 homes on the market. Homes were moving so quickly. The market was so overwrought and so overfired that houses were coming on the market. And then there just were not enough homes on the market, that what was coming on the market was moving quickly, that we would only have a couple hundred at most, and then we got down to anemic levels in the winter months. And indeed, we're actually there. We're actually lower than we have been in December of 22 and 23. What does that mean for the longer term? That means that we're going to have less new listings potentially in February and March. But in March, April, and May, the number of listings are going to go up. There are going to be more houses for sale. That's just the nature of the seasonality of our market. Total closed sales. Again, I just can't overemphasize the fact that we're talking about like long-term trends. And over the last month, it was 166, but basically been flat. We're living in this area of 100 and low hundreds to the 200s, but we're slowly going up over what we have over the last few years. What does the rest of 26 hold in store for us? We're going to find out, but it will definitely continue to tick up. It always does. December, January is the low point, and then February, March, April. February is the low point in 22, grew back up. So we're at the low point. So look at where we are at this low point. So is the high point going to be up here, up at the 250, even north range that we just barely kissed 250, 249 back in 2022. And then back in 2020 was when it crossed 250s. Will there be more closed sales? Will there be more people in the market buying? Will the number of homes coming for sale go up to absorb those buyers? I hope so. I hope that more people, now that the rate lock-in is starting to ease or has eased, the percentage of the population that has mortgage rates at that level closer to the current 6% as opposed to the historical 1s and 2% is higher, and they still need to move, that lock-in is easing. We're also going to see a good deal of new homes coming on the market here in the Greater Lafayette area over the next year, as there are several local, regional, and indeed national developers that are bringing some big neighborhoods to the market, including a new 1,100 door neighborhood that is breaking ground nowish. Days on market, I'd like to talk about this one. If you watch the show at all, you always hear me rant and rave about how fast and how hot the market is. It's 2 and 3 days in West Lafayette, and in all of Lafayette and Tippecanoe County, it's 3 and 4 and 5 days. Check this one out, though. Boy, Historically, over the last 5 years, indeed, it's lived down here at these fives with these peaks going up here and there and then drifting back down. But look at this climb to the stratosphere of 40 days. Houses are sitting on the market longer. Boy, oh boy, houses are sitting on the market longer. It's taking longer to get a house sold. Not a lot of the other numbers are moving. The same amount of houses coming on the market in a seasonal adjusted view, but it's taking longer to get them sold. Slightly more houses on the market because as they take longer to sell, those houses are sitting, so our inventory is growing. This number is not concerning, but it is something that we do need to pay attention to when other numbers start moving in concert with it. All right, 2 more long-term data points. Months of inventory. We've been around half a month to a month for the last, from 2020 to about 2023, and then it started growing to about 1.5, and then again peaked up to about 2.5 here at the end of the year. There are more homes for sale at any given time over the last few months, and there have been over the last 5 years. This is good from a buyer's perspective. You have more inventory to choose from, and you have a little longer to choose. So if you go see some houses on Friday and Saturday, you can spend Sunday and Monday talking about it amongst yourselves, talking with your loan officer, talking, about what works for you, as opposed to going to see a house on a Friday afternoon and having to put an offer in by Friday evening. I think that is a healthy and good thing. And then the last long-term trend that we will look at tonight is median sales price. And this is just a fun number. Over the last month, $287,000, up 3% year over year, but up 37% over the last 5 years. Back in December of 2020, our median sale price was $189, just a hair's breadth under $200. Now, our median sales price is $287. That's a lot. That's an increase just from those 2 data points of $100,000. On average, it was at that 2 to 220 level over the best part of 2020, and then was 220, 240-ish, and then it just continued to grow. Year over year, though, 3% median sales price growth in Tippecanoe County. Oh my goodness, Geoff, houses are too expensive. Yes, but your house is worth more too. And with that, I'll say thanks so much for joining us tonight. If you're interested in a value for your own home, for your own real estate where you live, or you're interested in buying a home, a first house, a second house, you need to move up or move down, do this right now. Go to thelafayettereal.com/YouTube and fill out the form, and let's work together on your housing needs here in the Greater Lafayette area, or indeed anywhere in Indiana. And also hit the like and subscribe button. Tell YouTube how much you enjoy all of our content here on the Lafayette Real.